This is Teddy from thefinancialbulls.com with your bi-weekly market recap along with some setups for the next 2 weeks. So right here on the top chart we have a daily chart of the S&P 500. On the bottom chart it's a 15-minute, about a month-long chart. So since the last bi-weekly market recap, we've kind of just had this really choppy price action right along here. And if you're a short-term trader holding positions for 2 to 3 days, you could have taken advantage of these types of moves because right here, for example, you had some nice support right here on 2045. Could have rode that up to 2089, ride it back down, ride it back up. And if you're playing just basic resistance and support, you could have made some money. But right now, I'm actually kind of cautious and I'm short-term bearish as long as we stay below this 2087 level. Because as you saw right here, we had a red dog reversal where yesterday the market rode up above the previous day's high, couldn't hold below that, and then just crashed down toward the end of the day, which was right along here. So we're still below that level, and we just kind of been choppy ever since then. Yesterday it was pretty choppy, and this is the morning before the market's open, so I'm saying yesterday. So as long as we stay below that, I think I'd rather put on short positions. But there are some oversold stocks that I'd be looking to take advantage of, as well as obviously some overbought stocks that have some potential. So taking a look at some prior plays from the past 2 weeks that have worked out, not worked out. For start off, I'm not going to just show you my good trades. I'm going to show you my bad trades as well. Cigna. If you shorted this, you would have been in a world of hurt unless you cut your losses early. So I signaled, just to get a better view, right here was the day that I got pretty bearish because we had substantial volume and also a red dog reversal with the stock finishing at the low of the day. We had follow through the next day, couldn't really hold though. It was a green day. It was a red day because it gapped down, but it rallied back nicely. And what's this day? The 26th. So that'd be like right here. So yeah, here was went up and then just collapsed after that. I thought it was going to continue. It didn't. It rallied more. So not a good trade, but you're not going to be right every time. Another short that actually worked out was JMEI, Jume International Holdings. We notified this short right here at March 25th, and as you could see, sorry about that. There we go. So as you can see, the stock rallied above it, but couldn't hold above that previous high like it did all these other times during that up move. So something changed in the stock, and it went from green to red. So I thought that was going to be a short-term top, and it actually was, and it continued down from $16.80 to a low of $15. So that move right there. So that was a great trade. That's a textbook trade that I always look for. Another stock that worked out, but not so well as the others, but still worked out, was Facebook. We saw this big red day right here after an extended move from 77 all the way to 85, and then that big red day kind of held it the next day, and then it rolled over from 83 down to $80. So you could have made money off this move right here if you were short and you played it tactically. You wouldn't make as much money as a JMEI, but still, you would have made some money. So for some long stocks that I'm looking at PIR1 Imports. Right now, they had a big gap down. Don't know why that was, but price action says it all. Rode it back up, and now we've kind of sold off from $14.44 down to $12. And as you can see, in the sell-off, right now we're starting to see some price action change, where the stock got below the previous day's low yesterday, couldn't hold below that, showing some relative strength. I'd look for a bounce. As Swift Transportation Company, similar, you know the play, red dog reversal. As you can see, past 2 days, this was some support at $25, broke below that, and rallied back above. And we're starting to see some buying coming back into the stocks after 10, 15 days of just bearish action. KNX, it's another stock. As you can see, we have the sell-off from 34 to 29. Everybody's selling. There's fear. I want to buy into that. So there's just straight red days. And now look, you can see the action, the buying action that's coming in with some nice volume too. So that would be a potential play. YRCW is another one. This stock isn't as convincing as the others. Nonetheless, went from $20 to $16. Can't go down forever. $20 to $16 is a substantial move. And as you can see right here, the stock is kind of forming a base in my opinion. broke below 16.12 right here, couldn't hold above that, rallied back up. So I think it could continue, maybe back to 18. I don't know. Nano is another stock. As you can see, the velocity of the sell-off is intense. It goes from 18 to 15.5 in a matter of 2 weeks. And right now, you're seeing on the 15-minute chart, you can see some buying coming back into the stock on some nice volume as well. And this is a typical red dog reversal. Sorry. For some short plays, I'm looking at CIE, Cobalt Energy. So this stock, I really like this potential short. So if you want to look at the move from $8.56 to $10.91, you could look at that. And you have just 3 straight up days right here. And then you have this big down 4% day on high volume. So as you can see, here is the uptrend. And then look, it just went above the previous day's high, couldn't hold below it. People who bought had to sell, had to have their stop losses in. People who shorted potentially made a lot of money. So on this 1 day move. So hopefully there's continuation. That's what I would be playing. And also it's interesting to note that this whole entire uptrend started on the 16th when there was a red dog reversal. So if I saw that, I probably actually would have bought into that as well, where it broke below 8.82 and then just went right back up to $9. And that was the 16th, so that was this day right here. STX, I'm also looking at this stock. This is shorting in the midst of a long-term downtrend, in a way. Long-term as in 6 months. It all depends what your time frame is. And it's just having some pretty toppy action right here after a move from 51 to 53. Not as convincing, but still play. CPN is another stock. And this stock has gone from $20 to $23 really quickly. And right now, as you can just look at, it's a pretty clean uptrend. And then you're just seeing this toppy action right here, where the stock goes above, can't hold it, still below that previous day's high, which is at $23.40. So I think this stock could be due for a pullback. And last but not least, BTE. Get a better view of this. Alright, well there you can kind of see it. Stock got hammered. It's been hanging out ever since and consolidating between 20 and 12. And right now it's at 16, but the reason I'm bearish on this stock is, as you can see on the 3-month chart, extended move from 13 to 18, very few down days. And then we have this day right here where the stock went above 1781, previous day's high, couldn't hold above that, and then just had a sharp sell-off below that level, and it's the steepest sell-off we've seen in over a month. So that's a warning, and I don't think it's a buyable pullback because the volume is a normal volume day. It's not low volume, and you can just see right here where it broke above 1776, couldn't hold above that, broke below, and the sell-off was really steep, and the stock is just, it's gone up too far, too fast. So I could be wrong, and the stock could open up today higher, but the path of least resistance is definitely down after a stock. Would you want to be buying a stock when it goes from 13 to 18, or do you want to be selling it then? You want to be buying it at the red dog reversal right here too. When the stock looks beat up and left for dead, that's when everybody is sold and there are only buyers left at 13.56. All the weak hands have got out, the smart money has come in. Right now, I think the smart money would be selling because the smart money was buying down here. They're not going to be buying after a $4 move or $5 move on a $13 stock. That's not a winning proposition. That's not a winning strategy in the long term. So I'd be a contrarian here and sell into this. So that's it for the bi-weekly market recap. Thanks for watching, and happy trading.